Hey guys, so I'm going to continue on with the last example. So we went through FIFO using the example for Army Navy surplus. And in that example, I walked you through how to calculate that cost of goods available of 6,696. I walked you through how we calculate the number of units available of 371. And then how we calculated and backed into the number of units in ending inventory for this example. One thing to remember is that under each of those methods, LIFO, FIFO, or average cost, as well as specific unit cost, we're actually always going to expense the same number of units, and we're always going to have the same number of units in ending inventory, regardless of the method that we use. But the cost that we determine for cost of goods sold, as well as the cost we determine for our ending inventory balance, is going to be different depending on the method that we select. For LIFO, LIFO stands for last in, first out for how we account for cost of goods sold. So under LIFO, we're assuming that and we're determining that we're going to expense the newest items, the newest purchases first, and then work our way backwards until we reach the number of units sold. So it doesn't matter if we actually sell our units this way. We could actually be selling our units FIFO wise, first in, first out, especially if I'm talking about like produce and such. But for accounting wise, for how we're going to expense items, we're going to go from the newest purchases backwards. So LIFO, cost of goods sold, we're going to start from the bottom. Did we sell at least 36 units? Well, yes, we know we did because we sold 318 units. So March 23rd is the first layer, the newest purchase. 36 units are in this layer at a cost basis of the highest, $21 per unit. Total cost of $756 is expensed because we sold that entire layer. We're going to work our way back. Up here, did we sell at least 165 more units? Well, yes, we know we did because we're nowhere close to 318 units yet. So as of March 17th, we purchased 165 units. And for those units, we paid $20 per unit. And we're going to expense the entire layer, $3,300. So you can kind of do a little assessment where you're at. So 165 units was in that last layer, 36 units. And all I'm trying to do is figure out how many total units I've expensed at this point. So I'm going to erase that. That's not correct. Here. 1, carry that 1, 0. So we've expensed 201 units, right? My math is correct. So 201 units. If I look up to the next layer, 95 units. Did we expense at least an additional 95 units? Yes, we did, because we need to still go towards that 318. So that entire layer of March 3rd is also going to be expensed. Sorry about that. So March 3rd, 95 units at a cost basis of $18 per unit, and 1,710 is going to be expensed. Similar to what we did for FIFO, we're going to do the same thing for LIFO in this case, but this last layer is actually the layer we're going to break up. So right now, if I add in those 95 units from that last layer that we just expensed, now I'm at 296 units expensed. And I know that I need to get to 318 units sold. So I'm just going to take 318 units sold back into how many units from this last layer I need. So 318 minus the 296, and I need an additional 22. Sorry for that pause. I need an additional 22 units from this beginning inventory layer. So beginning inventory, 22 units are going to be expensed at the lowest cost, $16 per unit. $352 for this layer is going to be expensed as cost of goods sold. So last thing I want to do is I want to add up these 4 layers, and does it equal the 318 units sold? It does. And then I'm going to calculate out LIFO, cost of goods sold, 6,118, which is higher than FIFO's, which we calculated at 5,870 previously. Costs are rising. You started with a per unit cost basis of 16 and you ended with a $21 cost basis. So costs are rising. In that case, LIFO will always have the highest cost of goods sold. What it also means is if costs are rising, if you're in inflationary periods of time, if you're using LIFO, you're going to show the lowest net income and you're going to have the lowest taxable income. So you're going to save money in taxes when you're using LIFO, because whatever we use for financial reporting purposes, we're also going to use for tax purposes. For LIFO ending inventory, it's what's left over. So if I look up here, we expense 22 of those units. So 53 of that beginning inventory is left over. LIFO ending inventory, you're starting from the oldest items because that's what's left. So this one's actually pretty easy. Beginning inventory, 53 units from beginning inventory are left over. We didn't sell, so we are not expensing those. They're left to be sold in the future at $16 per unit. Total cost for that layer that's sitting in inventory is $848. So we know that we have 53 units on hand to sell in the future. And under LIFO, the cost basis is going to be $848, the lowest value of inventory that you're going to have under those 3 methods: average cost, FIFO, and LIFO, because it's the oldest items in inventory that are left over under LIFO, the opposite of what you have under FIFO. So I hope this makes more sense. If you have any questions, let me know, and have a great day.